On May 17, 1792, 24 stockbrokers gathered under a sycamore tree at 68 Wall Street in New York and signed the Buttonwood Agreement, giving birth to the New York Stock Exchange. In the following years, the American stock market, much like the tree, began to grow and continuously expand. Numerous industries converge here, forming a thriving forest of the stock market, where each tree represents a listed company. Their development and changes reflect the growth trajectory of these companies. Take ExxonMobil, for example. From a macro perspective, the color of the tree represents the net profit margin, with greener shades indicating higher values. The width of the tree's base symbolizes the scale of revenue. Wider indicates higher revenue, while branches passing through represent negative revenue, with more passing through indicating larger losses. The height of the tree reflects the significant changes in its market value. The height-to-width ratio of a tree equals the price-to-sales ratio, hinting at stock valuations. The slimmer the tree, the larger the bubble. In Q3 2023's U.S. stock market, Nvidia and Microsoft stand tall and lean, signaling innovation-driven growth and high market expectations. In contrast, short and stout firms like Walmart, known for stable consumer goods and steady income, offer limited growth but a safe bet for investors. Stepping inside ExxonMobil, from a micro perspective, one can see the roots symbolizing revenue sources, deeply entrenched in the energy sector. The green canopy represents various profits, while the red canopy signifies various costs. The larger the crown of the tree, the corresponding value is also greater. The exterior and interior of these trees are the visual language of stock market data, helping us understand the market and grasp investment opportunities better. From a bird's-eye view, the larger a company's revenue, the greater its footprint, signifying a more prominent position within its industry. Let's switch up the layout to ensure that the higher the revenue a company generates, the closer it gets to the industry's core. Clearly, the sectors housing the Magnificent Seven stocks, consumer discretionary, information technology, communication service, and consumer staples, have entered a stage of oligopoly dominated by a single major player alongside several strong competitors. Other industries resemble more of a monopolistic competition scenario. If we compare the changes in the concentration of the U.S. stock market industries over the last 5 years, it's easy to see the prominence of the seven giants with a clear head effect and an intensification of industry monopolization. The growth of the stock market has witnessed numerous milestone events, all reflected in each tree in this forest. Some trees have witnessed the ups and downs of history, while others have just sprouted. Together, they constitute a vibrant and continuously developing ecosystem. In the future, we will continue to witness changes in this forest, hoping that our investment journey, like a stroll through this stock forest, will be filled with surprises and rewards.